Okay, everybody, let's go ahead and dive right in. So today we're going to be talking about managing accounts receivable in QuickBooks. Before I get into that topic, I do want to introduce you a little bit to Fourlane and what makes us unique. First thing, we'd let you know we are the #1 QuickBooks Enterprise team. So we have been the largest QuickBooks Enterprise team and the #1 Intuit partner since 2010. We also have 8 of the top pro advisors on our team, so we are very excited about that. We are also experts in accounting and software. So while other firms may specialize in either one of those things, we have specialists here for both. So that allows us to provide expertise across the board. One other unique is that we are not just QuickBooks, but we also work with other ERP systems. Right now we're partnering with NetSuite, Xero, and Acumatica. And one of the benefits of that is we can really help identify the right platform to be on. And then last, we are a strategic partner for change management. We deal with the changing processes, changing files all the time. And so we know what that takes and the stresses involved with that. And we are here to alleviate a lot of those challenges and make it easier. Okay, with that said, we're going to jump into accounts receivable. There is a lot to cover. I am going to go pretty quickly. If you have any questions, go ahead and post them and we can respond probably after the session. All right, so with that, first question, what exactly is accounts receivable? Or AR, as you see me abbreviating here. That is a critical component of a balance sheet. It represents outstanding payments owed to a business from its customers for goods or services. So something they basically are providing on credit terms. Money is expected to be received in. Overview, when a company sells goods or services on credit, it creates an account receivable entry, meaning that the customer now owes the money. So that is where all that is tracked. It is typically recorded at the time of sale or invoicing and is going to be, you're going to see it on the balance sheet as a current asset because it should be short-lived. Typically, we say within 30 to 90 days is the expectation that the funds are going to come in for it. It's important for a lot of reasons. We're going to go through a lot of that through this presentation. In summary, it's important for cash flow, knowing what the influx of cash is expected to be. Cash is king. We need to be able to get that cash in. Provides a relationship with customers so they know what they're getting. It's clear invoice. The clear invoicing is going to help with that communication. Allow for following up on overdue payments. Emails out with that. So you can kind of use that for customer satisfaction. It's going to go towards the health of the company, monitoring those ratios, aging reports, trends are all very important. But because of the importance, there's always going to be some challenges. So some of the challenges you might face with this are going to be problem getting collecting on the debt, right? Late or delayed payments. The longer it takes to collect, the more negative an effect on a company's financials. You have to get the cash in, right? It's all about keeping the flow. There's an administrative burden associated with it, especially doing manual invoicing. You've got to track it, you got to collect it, anything like that. And sometimes customers don't always like to get a bill, so there are some inherent challenges. But we're going to talk about ways to mitigate those. So just rehashing the importance. The timely collection is essential for maintaining your cash flow. We need to know that the company has enough liquidity to cover operational expenses, investments, any potential growth initiatives. That's going to be affected by your accounts receivable. Just improving your cycle time from 60 to 30 days can make a huge impact to a business. It's about maintaining the working capital. It gives you more ability to do more in the short run. So it needs to be well managed. It's going to help with risk mitigation, reducing the risk of bad debts, improving financial stability. So if it's well managed, less likely it's going to end up in a bad debt sometime. So it's staying on top of it. The longer it goes on, if it's not followed up on, the greater your risk that you're never going to collect. Customer relationships, it's going to help with that because you are giving clear and transparent invoicing, clarity on the services that you are providing, have provided, will provide, as well as clarity on what the customer owes. And again, kind of in summary, that all goes to that financial health assessment. There are some key indicators, key performance indicators that use accounts receivable in their metrics that we will talk about here later in this presentation. So how do we set it up? A couple steps here. First thing, set up the customer profile. You're going to have the customer before you're going to be able to do an invoice. So you'll start by doing that. I would recommend maintaining up-to-date customer records, making sure you have the right email address, because especially if you're going to be emailing those out, or mailing address if you're mailing them out, which I hope everybody's using email. You can use customized fields if you need to capture additional information like specific discounts, terms, or special instructions for billing. And you could personalize your invoice messages. So I would recommend kind of keeping up with that, the customer profile. Make note you can set the payment terms and credit limits in that profile, so that's also good to be able to manage and stay on top of. So the next thing that you're going to do is set it up in QuickBooks. So you set up the customer profile. Now you need to go ahead and set up some of the gateways. So right here we're talking about payments. So the ability to collect on it. Intuit offers a merchant service, which is very helpful. It will help eliminate some of the steps that you would have to do with other merchant services, because through doing that, the customer has the ability to pay online directly through your email even, and it will automatically post into your books and also show the deposits. So you're not having to do those extra pieces. So really strong recommendation is that integrated payment gateway. And also take advantage of automatic reminders, which we're going to be going into. So this is in the setup portion. All right. Another thing I would suggest you do is make sure you have the invoice set up to reflect your company and what you need appropriately. QuickBooks allows you to do that through customizing invoice. You can get to it right up here. You can see where that's directing you. So you would go under formatting, and then you'd select customize data layout. And you can see this is in the customer's profile. Here we have selected the Castle Rock invoice. So you can save multiple invoices, different styles if you wish. They may have different purposes. Maybe one's for a billing company, maybe one's for a customer, whatever you need to have it. And then you can set up the way it looks. And it's pretty granular in how you can set up. So you can set up different headers, how you want them worded. You can eliminate some, add some. You can have some custom fields show up on here, different columns that you want, footers, messages. And then if you go into like the layout designer, you can even move these around and do different colors. So it's pretty fun to play with that sometimes. Okay. So I'm going to just take you through the basic steps on how to create an invoice in accounts in QuickBooks. So first thing you're going to do is go ahead and create a new transaction. You can do it from multiple places. So just look for create invoice. Number one, that's the customer. So you're going to use the drop down and select the customer. If you do it from within the customer's profile, it'll automatically populate for you. Number two, select a class. That is if you are using classes. But if you are, you want to make sure that you use these consistently so that it posts to the correct place. Number three is selecting the correct template. As I mentioned in our last slide, you can customize multiple templates, so you may have different ones to choose from. You can easily select it with this drop-down. Number four, you're going to input your date. Number five, and the ship to right next to it, is the address. This is going to populate from whatever is in that customer profile field. So that's filled out there. It is going to be filled out for you automatically here. The invoice number is going to automatically generate sequentially from the last one you did. You can overwrite it and put in a custom number if you want to. Number six is the terms. So is this going to be due on delivery? Is it due in 30 days? Are you offering a discount? So it's like 10 net 30, for example. So you will want to go ahead and establish your terms. Select the correct one. Based off of that, QuickBooks will automatically put in the due date, so it will calculate it for you. Number seven is the meat of this invoice, which is what you are creating the invoice for. So this is the goods or services that you are billing the client. You could select this from that drop-down menu. See that little arrow? You select that, it's going to populate from your list item, from your item list, and you select what it is that you need. That hopefully, if that's all set up in that card correctly, it will fully populate, give you a description and rate. Otherwise, if it's not fully populated in the item card, you'll need to add in the rest of the details. So what is the rate? And make sure the amount is correct, units of measure, quantity, and such. So you'll might put that stuff in. Okay. Number 9 down here is selecting the tax profile. This will come in from the customer profile as well. Okay. So that's important to keep in mind. Note that the text up on the line is coming from the item itself. So whether or not the item is taxable, well, let's say that item is taxable, then it will come down to number 9 and determine is the customer taxable. And that is where it's going to show here. If it's not, you should select it and put in your sales tax venue. Okay. Number 10, you have the ability to jump over here and put in a custom customer message. This can all be set up by default so that you don't have to type this every time. That's where it is. Also, a quick little mention, it doesn't show on the screen, but there is an ability to do an attachment as well. And then, of course, number 11 is where you're going to actually save it. So you can save and close it. You can save and new, where you're creating a new one, and then it goes ahead and generates. Notice on the very top, which isn't numbered, but you have the option to email, print later. So I'll give you those options to go ahead and get them out to your customers as soon as possible. Okay, so we've talked about the preferences that you need, the ones that are recommended, starting with the customer profile, going into the invoice and the formatting of the invoice, and actually producing the invoice. Now we've generated the invoice and it's gone out to the customer. This is where the real fun begins, and this is where it's really critical to stay on top of it for all those reasons that I stated at the beginning. So now we need to track it. There's a lot of ways to track your receivables. There's reports, which I'll show you. You can go in the Customer Center, that'll show you. This is one of my favorite ways to track receivables because I like the visual, and that is found in the income tracker. So under customers, if you scroll down, you'll see an option for income tracker, and a screen will come up that looks a little bit like this. You'll notice this gives you a visual of what you have outstanding. This red box that has 0 overdue right now is the one I'm referencing specifically. If we're talking about tracking accounts receivable, that would tell us what is actually overdue. If you click on this box, and assuming there are some in here that are overdue, they're going to populate directly underneath, which makes it really easy to manage and see. You also have the open invoices, so if they're just open, it's going to show that. You can also see in the green what has just been paid in the last 30 days. So it's a very helpful tool to use, and I'd encourage you guys to check it out if you haven't used it before. Okay, now this is a really helpful tool that not a lot of people use, so I'm going to spend a little bit of time going through it. This is how to set up reminders and notifications. There are several steps involved to doing this, but once you do, you'll have it all set up and will generate automatically for you, which is really cool and help you stay on top of things without having to do it manually. So first thing, I'm going to turn on those reminders. Got to do that under preferences, and you can see what those reminders are. Step 2, you're going to go to customers, go to payment reminders, then you'll have the option for schedule payment reminders. And if you, again, we're assuming this is the first time, so we've got to do a new schedule. And you'll see it kind of look like this. So you're in payment reminders, new schedule, give it a name. Then the next thing that comes up is going to be defining a customer group. Again, we're under the assumption here that we don't have any customer groups to select, so we needed a new one. When you do that customer group, you get to pick field, operator value. That is going to be like date of invoice, right? Due date. The operator could be less than or greater than. Value, 0 perhaps, or maybe your field is going to be amount due. So maybe you only want to send this or set this up for people who owe more than $100, whatever happens to be. You have several options that you can select from when setting this up. Okay. Then once you do that, select those variables. Now your customers are going to populate. You'll see this up here in the upper right-hand corner for step 4. This is where you're going to select which customers are going to belong to this group. Obviously, you can select more than one, do one group, have more than one group created, right? But this is the step that it takes you through. Who's going to be included in that group? Then you finish it. Now you have the customer group set up, right? Ready to go, right? Already knows what it's looking for. The next thing is to actually create the reminder. Again, this is a one-time setup. So you set this all up in the beginning, and then it's going to run for you. So now we're adding in the reminder, and you're going to customize it, tell it. You're going to send it how many days after the due date or before the due date, whatever it happens to be. And you have the verbiage. You can change around. You can add in fields to automatically populate. It's pretty helpful. And that is pretty much all you need to do. Then you'll hit OK, and it'll all be done. My last little note here, because I want to mention, is all of this happens, right? You're setting it up. If you're like me, and like most people, you're going to want to check. Did that actually go out? It's all happening behind the scenes. So what actually happened? Just a little helpful hint. If you want to see if these reminders went out or any emails, you can always find them under the customer information card where it says sent email. All those emails will populate there, and you will see that that went out. That's one way to check that, by the way. Okay. So there is another tool I want to mention to you. This is something that not a lot of people know. So I'm going to take a moment to let you know about it, and that is the Collection Center. This is an enterprise. So again, to use this tool, you will need to enable it. You will find that in the preferences under Sales and Customers. Go ahead and checkbox it. Once you do that, you will find that Collection Center under the Customer Center profile. You'll see where it says Collection Center right at the top of the tabs, like that. So what does that look like? When you do that, you're going to get a list of overdue invoices and those that are almost due. So you can see right here, in this case, there's only one. If there was more than one, they would all show, right? This is not meant to be an individual. It's just customers with overdue invoices. So that's all going to show. You can put your a note in over here if you want to kind of keep track of different things. Maybe this customer said they're going to pay in a month or to hold off or whatever note it happens to be. You could put a note there. But it'll come up and then you can select and send emails in batch, which again, very helpful. So here you can see in the bottom where this invoice is going out, and here is the email that is going out to it. So this is another way, if you don't want to do it with automatic reminders, this is a way to speed up the process of batch sending out reminders to customers. And you could have a different verbiage, for example, for almost due. We have a really great podcast on our website that covers the collection management tool, and I'd encourage you to go ahead and listen to it. I think it's about 10 minutes long if you want more information on this cool feature. Okay, so now because we've done such great efforts and getting those reminders out and staying in front of the customer, now we've got payment. So again, want to remind everybody, adding that credit card processing is very helpful because it helps to alleviate several of these steps. But if not, you can always take the payment manually. You'll notice kind of how we do it here. You can tell what kind of payment it is, who it came from, and select the invoice that it's going to apply to. I'll take a moment here just to remind everybody that depending on how you have QuickBooks set up, this payment will either post to a bank account that you've identified, or it's going to post to undeposited funds. Undeposited funds can be very confusing to people, but what undeposited funds is, think of it like one of those deposit books that you get from the bank. So that is what undeposited funds is. You've got the payment, you've recorded the payment, but you haven't actually made that deposit yet. It's still sitting in that bank book, okay? That book makes it handy for you to group a bunch of payments together. So you only have to go to the bank once. That's what undeposited funds is for. It's holding on to all those payments, but it hasn't been deposited. You have to make the next step, which is to actually make that deposit if you are using that account. The benefit of doing that is that now it's going to make your reconciliation much easier because you have all of those payments appropriately batched into what is going to show on your bank statement because they all come in and they're grouped together with one balance. Otherwise, you're going to be picking all these different payments and trying to figure out what adds up to this. Not a good practice. But if you use it, it's important that you use the process appropriately or you'll end up with a mess and doubled income often. So it's very important that you know how to handle that one. Okay. Before I move off the slide, that credit card processing is, again, going to be very helpful. It also will allow you, if you want to use embed payment links within the invoice itself, or it could be an email that says pay now. There's different ways of getting that paid. And then once it gets paid, it will automatically process for you. This is also a good way, by the way, to set up like recurring payments for people that have like monthly subscriptions and such. Okay, reporting. So all of that's done. Now you kind of need to know where you are, where you stand, because as I said in the very beginning, accounts receivable is imperative to the health of the business. So it's something that needs to be managed and needs to be monitored. This graphical information, see, hopefully you guys can see it well enough, but this is like your payment status, receivable report, so you can have your payment reminders, customers who owe money, the AR aging on a dashboard. You can find that under Reports, Company Snapshot under the tab for Payments. This is a quick view of some of those AR measures. There's other specific reports that I've included them here as reference that you may want to pull to stay on top of your accounts receivable. I think probably the most common one that everyone uses is your accounts receivable aging summary, which will show you how old those outstanding invoices are. You can use sales by customer detail to kind of show you where everything is by customer. You can use collections report. You can use customer balance summary so you can see how it is by customer. You can use open invoices. There's others. This is just a good sample of the most common ones. Okay. Do you want to encourage doing as much automation as you can, like those automatic payments, right? Setting up the Intuit merchant accounts so that can get processed automatically. Setting up those payment reminders to go out automatically. The more you can do, the less work you have to do manually. So another option that you can use is memorize. So you could set up an invoice one time and memorize it. You could use it as either as a template, in which case you would just do not remind me, right? And it's just going to sit as a template, which you can pull up anytime you need and use it. Or, as in this case, we're going to set it up to automatically regenerate itself for whatever frequency it happens to be. Where I see this a lot, where I use this a lot, are cases where you're billing a customer on a monthly basis, right? Maybe it be a subscription company, a membership company, maybe a school where it's sending out tuition, whatever needs to be done every month. You could set this up to automatically generate. Very helpful. So you think about it. So if you do this, you have the payment information in, it's going to just automatically get out there, collect the money for you, and post it. Really streamlines. Just a quick recap here, or we're just about out of time. Best practices, you want clear and consistency. You want to make sure you have good credit policies in place. If someone's constantly late, you need to have a policy for that. You want timely follow-up. Sometimes offering incentives, 10% discount if paid within 10 days, whatever it happens to be. Streamline the payment processing and monitor your aging. There are certain key performance indicators to monitor the health of this process. These are a list of some of the ones you might want to take advantage of and keep track of. And then as conclusion, I think we've talked about this pretty clearly. It's crucial. It is crucial for the health of our business success. It can make a big difference. Just improving your receipts on these collectibles by 30 days makes a huge difference in your cash flow. QuickBooks offers some powerful tools that will help you with this. Use them as much as you can. Stay in the management. That's it for this topic, guys. We're on time. We do have a couple more. We do this every week, as I'm sure you guys know. Next week, we'll be covering class usage, which I'll be running, so hope to see you guys there. Let me know if there's anything specific you've got in mind that you would like to have us cover. With that, it has been my pleasure to present to you, and I hope you all have a great day. and I've gotten some out of it. Thank you.